Hello, everybody. Welcome to today's live stream. I'm Alex. I'm the head of marketing here at Credit Suite. And you get me today because of all of the weather going on in Florida. Everybody is okay on our end, and we're excited to keep moving. So I am super excited to talk a lot today about fundability and go over what fundability is, how you can leverage fundability to improve your business credit, access business credit, and improve your chances of getting approved by lenders and credit issuers. So a lot goes into fundability, and we're actually going to get into a lot of the little details around fundability. We're not just going to talk about concept, but I'll even show you how we apply a lot of the concepts that we talk about in fundability to day-to-day operations of your business. Because the fact of the matter is, fundability is one of the most important aspects of owning a business, running a business, being able to take advantage of opportunities, and it's ignored by most ordinary business owners. And they don't take the time now to prepare their business for what might happen or opportunities that could come up. And so they're stuck. They can't take advantage of those opportunities as they come up without proper fundability. So let's go ahead, get started. Let me pull up chat here so I can see where everybody's coming from. We've got Mike here from YouTube. Welcome. Go ahead, throw in the chat where you're coming from. And if you think you know what fundability is, or you've started building business credit, or you are working on getting a loan or financing or funding from a company now, throw that in the chat. I want to know where everybody's at. And I'll also be providing some resources throughout our live stream today. So welcome, everybody, no matter where you're coming from. I see some people joining from YouTube and Facebook and Facebook groups. So awesome. So this idea of fundability is all about making your business more attractive to lenders and credit issuers. So fundability is your business's current ability to access financing. And it's something that can ebb and flow. If you think about your credit scores, they can go up and they can go down depending on what you do personally, or even if in your business credit scores. The same applies to fundability. But fundability doesn't just look at how you spend your money, although that's a portion of it. It looks at a broader picture, and it's looking at all of these different factors that lenders and credit issuers are going to be looking at in your business, not just your credit scores or what's on your credit report. So let's keep that in mind. We want to give lenders a lot more reasons to say yes when you apply for credit or for financing, and take away as many reasons as possible for them to say no. So there's a lot of different aspects to fundability. There's 5 main pillars. We talk a lot about fundability foundation because, again, like I said earlier in the live stream, it's actually one of the most overlooked things. I've talked to a lot of business owners as we do research here at Credit Suite. Credit Suite ourselves has helped over 50,000 businesses improve their fundability, access business credit, and get lending. And when we talk to businesses that, especially more established ones, like 2, 3, 4 years old, they think, oh, my business is fine. I'm making revenue. I've been in business for, a few years now. I have employees. I should be able to get financing. And yes, you should be able to, but there are some things that just, again, most ordinary business owners don't consider, and they don't teach this anywhere. And so it's really hard to know what you should be focusing on and what you might already have as strong suits or weaknesses. So when we talk about fundability, we again really talk deeply about fundability foundation, and that includes a lot of different factors. But some of the main ones to consider are industry. So your business is categorized into different industries, oftentimes based off of the name. So I'm sure you've heard, and throw this into the chat if you have, if you've heard of an SIC code or an NAICS code. Those are industry identifiers that are used throughout the United States and North America, so even in Canada and Mexico, to identify and categorize your business with other businesses that are similar. That code in itself can get automatic denials or automatic manual reviews and things like that on your applications. And so it's really important to think about what industry you're in. And if you're in a high risk industry, making sure that you're identifying your key goals and what are some of the lenders and credit issuers that serve specific high risk industries. Because a lot of times you can't actually help what industry you're in. Other times you may be miscategorized and you need to correct that information with the credit bureaus. And oftentimes you may not even understand or know what industry you're in until it's too late. So certain industries are often high risk for a lot of reasons. It could be, personal injury or property damage, like construction. So there's a high risk in construction. There could be heavy cash transactions. So like convenience stores, things like that. Industries that are relatively low risk to entry, hobbyists, life coaching, things like that. Also real estate, and others. So there's an entire list maintained. And in fact, I think if you go to our blog, and I think Annie is in here with me. Annie, can you throw in the chat or pop up on screen our blog post on high risk industries? That would be super helpful. Thank you. So once we get that resource up there for you, you'll be able to go to that resource where we list out all the different high risk industries and what makes them high risk and all of that fun stuff. So we mentioned business name and how business name can contribute to your business being miscategorized in your industry. Your business name itself can be risky. So if there's things within the actual entity name, for instance, Sammy's 24-hour store, that's going to face more scrutiny than something just titled Sammy's. So keeping risky elements out of your business name can avoid potential rejection. Now, the other thing are special characters, and this is something that's overlooked. I own a business called Profit Systems and Solutions. And in my official business name, there's what's called an ampersand, or the little and symbol. That in itself can cause problems. It can cause issues with my business credit reporting. It can cause issues with how my business is pulled up. It may or may not be pulled up other places. I have to be super consistent with how I'm naming it across applications, across my bank account, all things like that. So business name is something that you don't want to ignore. It's one of the first things that we think of when we're starting a business oftentimes. And so you really want to consider, what is your business name actually going to look like to a credit issuer or to a lender? Continuing on in Fundability Foundation, we want to talk about business address. So who here has a official business address? They have a separate actual building or a full separate address, a commercial address for their business. And by the way, it's not completely necessary. It is just the best type of business address. If you think about it from a lender's point of view, you can't run a business from a PO box. You can't run a business from a one of those mailbox services like iPostal. You have to run a business from an actual location. And that's where, commercial addresses, so an actual building that's classified as a commercial address with the postal system, is your best case scenario for an address. Other options like a home address, especially after COVID, lenders and credit issuers are looking at home addresses, as a less risky option, because home-based businesses exist and they're existing more and more in the marketplace, especially after COVID. And then virtual addresses. But with virtual addresses, you have to be cautious about what type of virtual address you're getting. So believe it or not, there's a lot of different types of virtual addresses. And I see this conversation all the time where it's like, I got iPostal and I'm still getting approved. iPostal is what's considered a mailbox or a virtual mailbox service. They use places like Staples and other businesses to maintain those mailboxes. So it's not necessarily a bad thing to use an iPostal address for like a mailing address, but for your actual business address, the one that the Secretary of State has, the one that the credit bureaus have. And in fact, credit bureaus can understand the difference between a business address and a mailing address. The ones that your bank account has, those need to use the right commercial address or the correct virtual address. So look at things like virtual offices instead of just virtual mailboxes. That will help you really make sure that you're getting the right type of virtual address. There are some lenders and some credit issuers that do not like virtual addresses, and we provide all of that information within the fundability system. It's very hard to keep track of all of the different lenders, criteria, and qualifications. Continuing on in Fundability Foundation, you've got your phone number. So does your business have a dedicated phone number? I do not recommend using a cell phone number for your business for a couple of reasons. There are services that let phone numbers ring into your cell phone. You want to be able to take your number with you. And it, by the way, comes up as a cellular phone. So again, it's adding legitimacy to your business at all aspects of running a business, right? We need a website, we need email, we need a phone number. Your business has to look legitimate. And if you're constantly coming up as a cell phone, that could potentially cause issues. So having both a toll-free number as well as a local number are important. There's VoIP or voice over IP numbers that solve this problem and can also be listed in national databases and things like that. So those other services will actually let you forward phone calls and things like that to your cell phone. So and still keep it separate. So consider using a voice over IP type phone. Stay away from Google Voice. Google Voice is a great service, especially if you're just getting started. But when you're adding legitimacy to your business, Google Voice will come up as oftentimes a prohibited phone type. So you'll want to make sure that you're actually using a legitimate phone service. The other issue with Google Voice is if you want to eventually, your business is growing and you want to eventually move to a more capable phone service, you won't actually be able to take that phone number with you. Google owns that phone number. And it's called porting. So you want to make sure whatever phone service you're using now, you want to be able to port that phone number to a new service in the future. Especially thinking infinitely minded, you want to be able to grow your business and you're inevitably going to have to grow into new services. So then we move on to website and email. You need to have a website that lists your business name, the same address that you use everywhere. Again, the same phone number that you're using everywhere. And it needs to be a user-friendly and acceptable website. They take into account, do you have a website? Is it professionally done? Is it usable? And it can just be a one-page site. It doesn't need to be super, super in-depth, especially if you're just starting out in business. But it should have all of that criteria readily available so that if a lender or credit issuer is going through and checking out your business, you look like a legitimate business and you're behaving like a legitimate business. That also adds to email. I'm in marketing, and email is still by far the highest ROI marketing channel out there. It's also incredibly important when you're building business credit. So if you do not have a business email address, something like your name or info or whatever it is at yourbusinessname.com, you are missing out on a lot of benefits. One is marketing softwares won't let you use or send from free email providers like Gmail or Yahoo or anything like that. Two is it looks illegitimate to lenders and credit issuers. You need to have a real business email address. Google Workspace is a very affordable, low-cost option that lets you provide your business with branded emails for your own website. Then you've got licenses. This is totally dependent on what industry you're in. If you need different licenses at different levels of government, you just need to make sure that those licenses are maintained and then you have access to them. And then, of course, having an EIN number. The EIN number is issued by the IRS for free, and it's important that you register that EIN number. Again, using the same information across the board. The IRS needs to have the right address and phone number. The bank account needs to have the right address and phone number. Your Secretary of State needs to have the right address and phone number. And if you change something, you need to change it everywhere. It needs to be congruent. Then we talk about entity. So when you file with your Secretary of State, your entity needs to be a fundable type. So sole proprietorships and things like that are not fundable. Lenders and credit issuers oftentimes will not approve sole proprietors. And you're also not separating your personal assets and your business assets. Everything is merged. And so oftentimes you won't even be able to open business type accounts because they don't look at a sole proprietorship as a separate entity. So things like LLCs, S Corps, and C Corps, depending on how you want to set up your taxes, are all fundable entities and can be a really useful tool when you're growing your business, starting your business, and improving your fundability. You also need to have separate bank accounts, merchant accounts, things like that are specifically in the business's name. This helps you in a lot of different ways. One is it makes sure that your personal finances and your business finances are separate. And it's also more fundable. You're going to have to provide for certain types of financing, things like bank statements and all sorts of stuff. And if your credit and your banking are all intermingled with yourself personally, that causes a lot of different issues on the lending side. And by the way, the IRS does not like when you commingle funds. Merchant account, this is a modern way to be able to take payments from your customers. And then we've got things like the credit reporting agencies. Dun & Bradstreet is the largest credit reporting agency on the business side. They will most of the time generate a DUNS number for your business automatically. But if they don't, you can, of course, register for your DUNS number, again, for free. Having that DUNS number is really important. There are some credit issuers and lenders out there that will ask for it. It's also used in other places. A lot of people ignore the fact that your fundability doesn't just impact business credit and funding approvals. It impacts things like your ability to get approved for advertising. Once you start spending a certain amount as your business scales in advertising, your business is going to have to be verified by Facebook and Google. Do you know what Facebook and Google ask for when they go to verify your business? It's your DUNS number, and it's also your EIN number. You actually need to provide both of those to get your business verified as an advertiser so that you can keep advertising effectively. So other things that your fundability foundation impacts, stuff like business insurance. So just like on a personal insurance policy where they're going to pull a version of your personal credit reports, business insurance underwriters are actually going to pull various different reports from various different credit agencies or data agencies. So it's important that your fundability foundation is tight and all of that information is accurate across all of those different agencies. So now I want to go and show you how we actually apply all of these different things. And if you're wondering, how do I understand where my business is right now? You can take the fundability scan. This is a complete beta tool, and I'm not even supposed to be releasing it, but I threw this in today just because I think it's important when we're talking about fundability foundation that you have insight into what a lender or credit issuer is going to have an issue with. So basically what you'll do is you'll just go ahead, scan the QR code right now. You'll be taken to fundabilityscan.com where you can start scanning your business. Now we're going to actually check a credit, check and verify your information with one of the credit bureaus. And then we're also going to look at your address type and see, is that address type fundable or not? You'll get a report page and things like that. And we'll also email you the link. So be on the lookout for that email so that you can go back to that report. And then, of course, I encourage you to schedule a consultation after you complete that scan so you can review the results with us. When you review the results with us, we'll go over everything, why all of that stuff is showing up the way that it is, and then show you the next steps. Now, if you get an all green, fundability scan, it likely means that you could probably start accessing some financing now. I'm not saying that's true. It's based off of the information that you provide. So all of that is pending, of course, the different lenders and whatnot. So let's dive in. I'll bring that back up in a moment, but I also wanted to dive into how we apply, what we just talked about. So we talked almost entirely about fundability foundation. We went over business address. We went over entity types. We did not talk about ownership and how ownership shows up on business credit reports and things like that. We talked about EIN, business phone number, and so on. So this is our actual product, and I'm showing you this not to try to get you to get our product, but it's really because this is a really good application of all of these different things, and understanding what you need to focus on is the key to success here. So you may have a lot of things that are going really well in your business, and often established businesses do. And then there's these little things here and there that as you're growing your business, you're not thinking about. And that's why we created this software, so that you can understand exactly what's impacting your business and also exactly what to do about it. So just for example, I am going to say I don't have a business phone number. We'll actually provide resources for you to go and directly get that business phone number that are fundable and vetted. And we'll also, that will also then impact your fundability score and the types of different financing that you have access to. So we talked about fundability pillars at the beginning, and we just talked about foundation today in depth, but you've got things like your financials, your business credit reports, as well as your personal credit. Your personal credit is a vital tool that you can use when it comes to funding your business. And most business owners say, like, I want to get business funding without my personal credit. Well, there are types of funding that you can do that with, but as you're building business credit out and using it to run the day-to-day operations of your business, you should be freeing up personal credit utilization. You should also be focusing on adding positive accounts to your personal credit to boost that score. Again, if you think about it like the foundation of a building or a stool, if you have a two-legged stool, you're going to fall over. If you have a three-legged stool, it's sturdy. So the more legs you have to stand on, the more fundable your business becomes, and the more likely you are to get higher approvals, better rates, and better terms. So now we go into business funding. We're also going to show you, that's the beautiful thing, is what's directly impacting your business's ability to apply and qualify and pre-qualify for these different funding types. So if I'm looking for trade vendors or business credit cards or business credit accounts, I'm trying to come in here, but my business phone number is a problem. So now I have the exact path and I know exactly what I need to be focusing on now to fix things for what I want to have access to in the future. For example, if I want credit line hybrid, I need to increase my personal credit scores. If I want revenue financing, I need to increase my personal credit scores. So those are all things that impact your business's ability to get financing. So let's just update this really fast. And this is a demo account, so it does let me put in some information here. And now I have a match to different types of financing. And I can push all of my data directly to our funding team, who will review it and then get on the phone with me and talk over what my goals are and what I need to do from here. We also have the ability to track all of these different things, which of course shows us our trade vendor distribution, what vendors are reporting where. And then something else that, we'll have to open that up. I wanted to show you Bureau Insights, because this is our version of all three credit bureaus information. So Dun & Bradstreet, Experian, and Equifax commercial. And we are able to pull in all of that data and be able to see, what's reporting, what's not reporting. We also have cash flow monitoring, where you can attach your bank accounts and be able to see cash flow across your business. So those are the main aspects of Fundability Foundation, how we apply those main aspects of Fundability Foundation to helping your business. And of course, you can get started right now just by completing a fundability scan. This is, again, it's gonna scan one of the credit bureaus, and then we're also going to ask you some basic questions about your business. And if you answer them truthfully and accurately, we'll get a better picture of where your business is now, and then also what you need to focus on. And again, you get a free review of that fundability scan with our team. So I want to go over to chat here and see if there's any questions that I missed. So let's see. Taylor asked, could a NAICS code be changed? It can be corrected. You have to make sure that you're correcting it everywhere. So across the different credit bureaus and things like that. There's a bit of a process to it that our advisors normally help people through. So good question. Let's see here. I'm a restaurant and I know that's high risk. Is there an NAICS code that I can use that's less risky? You would have to do a whole review of your business. I think that's a really good question for our team and probably a little bit above my pay grade, Aviana, but give us a call, 877-600-2487, and we can go over your business and see kind of what the different options are. There also are tons of lenders and credit issuers specifically for certain industries. So I know obviously the cannabis industry is relatively high risk, is extremely high risk in the eyes of traditional lenders. But there are lenders and credit issuers that specifically serve those industries. So even if you're in a high risk industry, it's not the end of the world. There are plenty of other, lenders and credit issuers out there. Someone asks, is property management in a high risk industry? You know what? I'm not sure. I'll have to look that up really fast. 1 second. So I also created, which we give away as bonuses. Let me see if I can share a new window really fast. We created a custom GPT that helps you guys understand if your business is high risk or not. It goes over the whole industry and if they're high risks and all the different ways that you can use business credit for that industry. So here's your NAICS code. Let me see. Silverman asked, is property management high risk? And let's ask it, is it high risk? No, so property management is not generally considered high risk. Now, it depends what your business name is. It depends, other things you've got going on in your business, Silverman. So just because your industry is not high risk doesn't mean you could be misclassified. And it also doesn't mean that there could be other issues going on in your business. Aviana asked a really great question. How do you change your information on your Secretary of State website? So there are specific forms, Aviana, depending on what state you're in, that you'll need to fill out to update information. It's the government. So there's definitely some bureaucracy that you're going to have to go through. So if you change your business address, if you change your phone number, update it with the Secretary of State. Then you got to update it with the IRS. Then you got to update it with your bank. Then you've got to, update it with the three major credit bureaus, DNB, Experian, and Equifax. So I don't know what state you're in, Aviana, but, just go to your Secretary of State's website. They should have a whole section for updating business information. And if they don't, they'll typically have a phone number to call. Our customers, our clients, when they're using the fundability system, get access to our advising team. Our advising team helps answer all of these questions. They have phone numbers that we, keep up to date, and they're constantly testing for the secretaries of state so that you have the resources that you need to work effectively and quickly. All righty, let's see. All right. Don't see any other questions. Aviana says, I'm just starting my business and trying to make it more fundable. That's great, Aviana. I suggest going and completing one of our scans. And there's the QR code that you guys can scan right now or click on. I think you can click on it. Annie, can you throw the scan URL into the chat so that they can access it there too? So I really recommend taking one of the scans. That's going to at least help you identify what's going on in your business right now, and then exactly what you should be focusing on in the main factors of fundability foundation. And then just grab that time with our team. They'll go over your results with you and then talk about what needs to happen in your business and see if we're a good match to work together. So again, if you're interested in really building the fundability of your business so that you can access things like business credit, so that you can access things like lending and anything from traditional loans to alternative types of lending to SBA loans, you're gonna need fundability. And again, fundability doesn't just look at how you spend your money. It looks at your business's foundation, your business's name, your time in business, your personal credit. It's looking at all of that information and understanding what's good, what's not so good, and what absolutely needs to be worked on. And we're going to show you that path that you actually go down so that you can understand what you qualify for now and then what you need to do to qualify for more in the future. So the way to get started with that is to go ahead, complete one of our fundability scans. It's completely free. There's no charge to it. And there's also no charge to meet with our team to go over your results. And there's no obligations or anything like that. So go ahead, complete that scan and schedule some time with our team. And they're happy to help you out and answer more specific questions. Let me go back to our chat here. Awesome. Alrighty, I don't see any other questions. So that is it for us today. Thank you for hanging in and talking about Fundability Foundation with me. I don't get to do live streams very often, so it's good to see everybody. And if you do have any questions, reach out to us at 877-600-2487. You can also visit our website, creditsuite.com. We've got a lot of really awesome blog posts there on a variety of different topics. And then, of course, YouTube, youtube.com/Credit Suite. Tons and tons and tons of videos throughout the years that go over all of these different things. Keep in mind, business credit and funding changes pretty frequently. Lenders and credit issuers change their criteria all the time. We're the only company out there that has an entire team just dedicated to researching what are the qualifications, what bureaus do they report to, and then we work really closely with a variety of different brokers and lenders to get you the funding that you need, and then of course hundreds and hundreds of different vendors to get you the business credit that you need. So thank you, everyone.